While Dalal Street has been run over by bulls the past few days, a whole lot of factors seem to be dictating global market trends, not all of them positive. Analysts expect India's gross domestic product, or the GDP, to more than halve quarter to quarter to 6.3% in July-September. The slump from first quarter of this fiscal comes as geopolitical tensions reinforced global economic headwinds. Amid these, a downside risk to growth also stems from declining demand. Overall, economists expect the incoming GDP figures to keep the Indian economy on track with RBI's full-year guidance of 7%. Apart from State Bank of India, which has a slightly bearish view of economic growth at 5.8% in the quarter gone by, most firms like IDFC First, Deutsche Bank, Kotak Mahindra and Yes Bank peg Q2 growth in the 6.2 to 6.9% band. Some rating agencies like CRISIL and ICRA expect growth at 6.5%. ICRA, in its report, expected growth to be driven by the services sector, although a subdued trend is seen for industries, agriculture, forestry and fishing. A slew of agencies have also slashed their full-year forecast on India's growth. Goldman Sachs has gone ahead and cut it to 5.9% from 6.9%, whereas Moody's pegged India's growth at 4.8%. S&P Global Ratings has also revised its forecast downwards by 30 basis points to 7%.
For the year, we are at a 6.9% growth, while a lot of the multilateral agencies have been downgrading growth. Our original growth estimate for the year was at 7%, and therefore we are not too much deviant from that at this point in time. Going forward, I think the challenges will be on the personal consumption front. This quarter or the third quarter, personal consumption may have been relatively sort of better and resilient because of the festive demand. But given the higher interest rates and given the very fact that inflation continues to be sticky, the private consumption demand could struggle in the fourth quarter and in the quarters hence, because we are looking at a lag with which the monetary policy operates.
The Reserve Bank of India too has revised its 2022-23 growth estimates to 7% from 7.2% earlier. Like most central banks, RBI too has hiked interest rates 4 times this fiscal by a whopping 1.9% with a view to tackle inflation. There are, however, several headwinds which the Finance Ministry has said may drag India's growth down over the next few quarters. Though global commodity prices are falling, something which will ease inflation pressures, overall global economic activity has deteriorated amid monetary tightening. Exports are also expected to slump because of this. The first gusts of the headwinds are already being felt, with merchandise exports falling 17% in October to below the 30 billion mark, the very first year-on-year decline since February 2021. Bureau Report, Business Today TV.
If you like the video, do like, comment, share and subscribe.